they're either in MicroStrategy where they're never going to be sold, or they're like in various people that are holding for 5 years or 10 years. They don't plan on selling anytime soon. And then it only takes a very small spark of new demand to come into that like wall of just not going to sell. And that's what we're seeing now, that a fairly still modest amount of new capital is coming into the space, but so many of those coins have already rotated to like the diamond hands and away from the fast money. And so I think that's still a cycle we probably have another 12, 24 months of going through.
The digital gold rush is no longer on the horizon. It's already underway. Bitcoin, once seen as a speculative fringe asset, is now being treated like a long-term, locked-away treasure by its most serious holders. As institutions eye the dwindling supply, a seismic shift is unfolding quietly but undeniably. This isn't a drill. This is the early phase of an irreversible transition where supply is drying up and demand is only beginning to heat up.
I don't think anything has to happen this year in particular. It's already happened. But I do think if we're talking about the future of Bitcoin, I think that we're in the Bitcoin gold rush era. And it started in January of 2024, and it will run till about November of 2034. It's a 10-year. And the reason how many people know what happened in November of 2034? It's an important date, you know. If you pull Clark Moody's dashboard, you'll see that. In November of 2034, 99% of all the Bitcoin will have been mined. And the last 1% comes out over the next 100 years.
We're now on a countdown, and the clock is ticking toward a moment that will reshape financial markets forever. The mining of Bitcoin is programmed to taper off, leading to near zero new issuance by 2034. This built-in scarcity turns Bitcoin into a resource that becomes more valuable with each passing year. As more people realize this, the rush for ownership only intensifies.
For all practical purposes, stock to flow becomes irrelevant. The stock to flow ratio of Bitcoin is infinity in 2034. It's within the tolerance of just random hourly trading of the asset. So it becomes noise. And so you have about 42 quarters, somewhere between 40 and 42 quarters. And if you look at that 40-quarter period, at the beginning of the gold rush, no bank could custody Bitcoin, no institutional investor could buy Bitcoin, no Wall Street trading firm, no investment company could handle Bitcoin, and it was unclear whether that ever would happen.
A decade ago, Bitcoin was fighting to be taken seriously. Today, it stands on the verge of becoming a mainstream financial instrument. That transformation began when regulatory clarity and technological infrastructure finally intersected, allowing institutions to engage, and now they are lining up at the gate. The scarcity is real. The infrastructure is nearly in place, and the system is being rewired in real time.
And when those spot ETFs were approved, that created a fire or an avalanche. The genie's out of the bottle. It doesn't matter who's elected president next. It doesn't matter who's the next head of the SEC. It doesn't matter. And no politician's opinion, no banker opinion, no regulator opinion matters after that date. That was the most consequential thing that kicked off the gold rush.
The approval of spot Bitcoin ETFs was a historical tipping point. It instantly legitimized the asset and unlocked a new corridor for capital to flood in. It's no longer about if institutions will buy. It's about how soon and how much. What once took years to build can now move in minutes through massive wire transfers.
So when they can buy via their bank, their institutional wirehouse, their prime broker, they will make a $50 million decision in 1 hour. And they will watch you and cheer for you or laugh at you for 20 years when they can't buy. So we flipped a switch in January. What you've got is 40 quarters of people getting educated, and here's what happens next. All those ETFs, they're only distributed through 20% of the distribution channel right now. They're maybe even 10%.
The distribution phase is just beginning. We're not even at full throttle. Right now, access is limited, slow, and bureaucratic. But over the next few years, those barriers will fall, and every major financial institution will be forced to accommodate Bitcoin or risk irrelevance. And when that happens, the remaining supply may already be spoken for.
So you're going to see resistance drop. You're going to see all the major banks add support. Then the next question is, well, is it creditworthy? Can I borrow against the asset? No major bank in the world will give you a loan against those ETFs yet. They've all got clocks that are running after 30 days, after 90 days, after 6 months, after a year. So first they let you buy it, then they loan you money against it.
What starts as a trickle of interest soon becomes a tidal wave once the tools of modern finance catch up. Buying is just the beginning. Once banks begin lending against it, trading options on it, and using it as collateral, the pressure to acquire Bitcoin only grows. And again, the problem isn't about availability. It's about vanishing supply.
Then you'll actually see all the big banks that don't like Bitcoin getting pressured. Like now we have to custody it because our biggest customer wants us to. So right now you can't custody, but there's a big battle afoot on Capitol Hill. That battle will take place. Bitcoin will win that battle. Then you'll see banks custody, then you'll see 1, then you'll see 10, then you'll see 100, then you'll see 1,000.
The tide is turning even among the traditional naysayers. Banks that once scoffed at Bitcoin will soon be forced to adapt as their most valuable clients begin demanding access. Political resistance may linger, but the trajectory is unmistakable. Custody solutions, lending, and full integration are not a matter of if, but when.
There'll be a day when Bitcoin ETFs have already blasted past gold, and then Bitcoin ETFs trade more than the S&P index ETFs. And there'll be a day, I believe, when Bitcoin ETFs will have more capital than SPY or the S&P index. And on that day, the people at Vanguard will say, oops, I guess all the money just shifted out of equity. But that day won't come tomorrow. It'll take many, many quarters.
The vision for Bitcoin's future isn't just about price, it's about displacement. When major ETFs based on Bitcoin surpass even the gold and equity benchmarks of today, that's when the financial system as we know it will have been completely transformed. The reallocation of global capital has already begun, and the countdown has already started. We've just walked through a pivotal moment in financial history that's unfolding right now. Institutional adoption has begun. ETF approvals have lit the fuse. Scarcity is no longer a theoretical concept, it's reality. The infrastructure is catching up, and by the time the average investor is ready to act, it might already be too late.
Preston, I think that the quick answer to your question is better layer 2. I mean, Lightning needs to get a whole lot better, a whole lot faster, and I think it will. But let me give you a little bit longer answer to the question if you indulge me. In the early 80s, I started my business career. The IBM PC was introduced in 1980, and Microsoft came public in 1986. Came public at 14 times trailing, and it's growing 40% a year. And at the time, if you were in the computer business, you were at IBM or Prime or DEC or Wang. And the mini computer was really the thing, and a lot of people regarded these PCs as toys. And I think it's an interesting analogy that back at that point in time, software was regarded as risky because it was ones and zeros, and people didn't see that there could be any value in it.
So what do you think? Is Bitcoin today just another misunderstood toy? Or is it the next Microsoft waiting to upend everything we thought we knew about money? Let us know in the comments below.